So here's a wild thought. Could silver, right now, be walking a path that Bitcoin already blazed more than a decade ago? That's the fascinating question we're going to dive into. And believe me, this isn't just about lines on a chart. Nope, we're talking about market patterns, investor psychology, and maybe, just maybe, a roadmap for what's coming next.
It all kicks off with a massive shock to the system, a negative 21% drop in a single day. Yeah. For anyone watching the silver market, that was just a brutal, whiplash-inducing moment. Weeks of gains? Gone. Wiped out in just a few hours. And that, of course, brings up the million-dollar question. Was that crash the end of the line for silver's incredible run? Or is it just a really dramatic pause before the next act begins? Well, that's exactly what we're here to break down, by looking at some powerful history. Okay, first, let's just talk about silver's parabolic shock. Because to really understand why that crash was such a big deal, you have to appreciate the sheer scale of the rocket launch that came right before it. This wasn't just a bull market, it was something else entirely. The numbers are just staggering. We're talking about a gain of over 300%, with the price peaking at $122. But you know the old saying, what goes up that fast can come down even faster. And boy, did it. The crash that followed wasn't just some minor dip. It was one of the most severe single-day drops we've seen in over a decade. This is the kind of volatility that screams that a market is at a huge turning point.
Now, here's where things get really, really interesting. This whole sequence of events, it might not be new. To understand where silver might be headed, we're going to hop in a time machine. We're going back to Bitcoin's legendary 2013 bull run, which may have literally written the playbook for what we're seeing today. And the most important idea here is something called the double peak structure. You got to get this pattern. Think of it like a two-act play. Act 1, you get a huge surge to an initial peak. Then comes this terrifyingly deep correction that shakes out all the nervous investors and makes most people think the party's over. But that just sets the stage for Act 2, an even more explosive rally to a much, much higher second peak. Remember that structure. It's the key to this whole thing.
And here is that exact structure playing out in Bitcoin's wild ride back in 2013. You can see it right there, the first peak in March at $234. Then that absolutely gut-wrenching 71% correction that lasted for months. I mean, everybody thought it was over. But that was just Act 1. Act 2 was that incredible surge to over $1,200, followed by, you guessed it, the inevitable long collapse. This right here, this is our blueprint.
So, with that blueprint burned into our minds, let's put silver's recent action right next to Bitcoin's history. This is where the similarities start to look less like a coincidence and, well, more like a pattern that's repeating itself. Laying the data out like this reveals some really striking parallels. I mean, look at the intensity of that final parabolic phase for both. And notice the RSI, the Relative Strength Index. It's basically a momentum meter. Both were just screaming hot, way up in extreme territory. Silver hit over 95, which is a classic sign of massively overbought conditions. And then, of course, that sharp, painful drop right from the peak. The exact numbers are a bit different, but the character of the move is just so similar. So let's just run down the checklist of key similarities. Do we see that double peak structure playing out? Check. Do we see that crazy exponential acceleration into the final high? Check. Those extreme over 95 RSI readings signaling a totally overbought market? Check. And of course, the massive crash right off the peak. Big check. The echoes here are, well, they're pretty hard to ignore.
So if silver is following Bitcoin's 2013 playbook, what does that playbook say happens after the big crash? This is where we shift from just comparing the past to trying to project the future, to mapping out the most probable path forward for silver. The analysis points to 3 potential short-term scenarios. The most likely, with a 60% probability, is what they call a relief rally. A less powerful dead cat bounce, a temporary little recovery that just fails, that comes in at 30%. And a continued immediate collapse is seen as the least likely at just 10%. So the main takeaway here is pretty clear. Some kind of bounce is probably coming.
And if we drill down on that most probable outcome, the playbook actually points to a relief rally targeting the $105 to $110 range. Now let's be really clear here. This isn't a prediction of a new all-time high. Not at all. It's seen as just a technical rebound, a really typical feature you see in markets after a big crash, before the longer-term trend resumes. So, if the playbook is correct, here's the predicted path. Step 1 is the bounce, a short, sharp rally that might last 1 or 2 weeks. But, and this is a huge but, after that bounce comes step 2, the resumed decline. This is where the price is expected to fall back down towards that $70 to $80 range. Finally, step 3 is the stabilization, a long period of just going sideways, not a quick V-shaped recovery.
Okay, so what does this all mean for you if you're watching the silver market? Let's distill this entire analysis down into the most important takeaways from this whole historical playbook. What's the final verdict?
All right, here's the bottom line advice from the playbook. For anyone still holding silver, this upcoming bounce is seen as a gift, a potential opportunity to sell into strength. For anyone looking to buy, the message is patience. Chasing this bounce is considered pretty risky, with a much better entry point maybe coming later in the year. The playbook's ultimate target for this whole correction is around that $70 to $80 mark, followed by a long, slow road to recovery.
And I think this quote from the analysis just captures the sentiment perfectly. It's direct, it's almost a little ominous, and it's all based on these repeating patterns of market history. It frames this next potential move not as a sign of renewed strength, but as a tactical window of opportunity, a gift.
So, we're left with this final thought. You know the saying, history doesn't repeat itself exactly, but it often rhymes. The parallels between Bitcoin in 2013 and silver today are pretty compelling. The question now is whether silver is going to follow the script all the way to the end, or if maybe, just maybe, this time the story will have a different ending.